Welcome to Fintech Daydreaming, the podcast that dives into the world of banking technologies and the ever-changing landscape of fintech companies. We bring you real-life examples from global and local thought leaders, as well as experts working within the financial industry, and seek out the best stories from the front lines of financial services innovation, where dreams of industry pioneers meet reality. Hosted by Paul Krogdahl and Ville Sontu. This is Fintech Daydreaming.
Welcome back, everybody, and you know what time it is. It is time again for the Nordic Fintech Highlights here on Fintech Daydreaming. That means that we will be doing a quick deep dive into what's hot, what's not hot, what's new, and what's interesting in the world of fintech news for the Nordic region. And as always, we do this in partnership with our good friends at Helsinki Fintech Farm, and Janne is with us. But as always, I am Paul Krogdahl. I'm going to be your host for this episode, and I wouldn't even dream or dare of doing this without my fantastic friend, Ville. So, Ville, how are you this beautiful day?
I'm doing good. You know, it's the time of the year when we're starting to get these rankings on podcasts. And as you might have noticed, we got ranked in a few different places in some different rankings. I think the best one we got was like 11th globally, but the one that actually I think matters most of those rankings was 19th. So I still consider it's a good one because, again, it's a global ranking of fintech podcasts. So not too bad, not too shabby for our little podcast here. And because of that, I'm feeling fantastic.
I agree with you completely. I mean, for what has, for the last, 5 years, been a passion project for you and I, to be ranked in the top 20 of global fintech podcasts. I don't know actually how many there are in total, but I'm going to guess more than 100. I think we've done fantastically well. Let's see if we can't push that all the way up into the top 10 at some point in time. I think that would be good. But with that in mind, we are growing, we are expanding, and we need to have better quality. So Ville, I think it's really exciting for us to announce that we have, after 5 years, found ourselves someone that's going to help us with production and editing. Femi, who is not Finnish but is now living here in Finland, has joined us, and with that I'd like to introduce Femi to all of you. So Femi, why don't you say a few words and share with everybody a little bit about your background, history, and what you're doing here in Finland.
All right, thank you very much. It's good. I'm so happy to be here, Ville and Paul. I'm a big fan of financial technology myself, and I have a bit of experience in the financial side, and it's great to be here to also learn about financial literacy, and that's what basically the podcast is all about, and educating, helping startups on the best way to navigate the fintech industry. So I'm happy, being an editor and a producer will give me an opportunity to actually listen to it, because you'll be editing, so you just have to sit down and make sure that you get involved in the conversation. You're able to learn a lot of things, for the future, and the world is going in the technology with the rise of AI and all that. So I think it's a big opportunity, and I like to be here. Nice. To edit and produce Fintech Daydreaming.
Fantastically cool. And like I said, it's great to have you here with us. But also, being the Nordic Fintech Highlights, we can't do this without our wonderful friend Janne from Helsinki Fintech Farm. How are you, my friend?
I'm good. Thank you very much. Great to be again on the episode. And have to say that this week I've have occasionally these spring vibes, and the winter holiday is only ahead of us. So I don't know if I should be worried or confused or what.
We're all confused with the weather right now, so don't worry about it.
I hope you haven't sort of booked to go skiing here in the Helsinki region for your holiday time.
No, I haven't. I hope to go somewhere north, maybe a bit later in the spring.
Wonderful. Myself, we are actually heading off to Spain, so we're going to go and spend the week in Spain and try and enjoy a little bit of sun. I don't think it's going to be stupidly hot down there in Spain, but it's at least going to be a little bit warmer than it is here in Helsinki. So I'm looking forward to some relaxing, some good food, and some sangria, potentially on the beach. What about you, Ville? Are you traveling away anywhere?
I'm playing it safe. I'm taking my winter break in April. Then I'm going to the Coachella Festival in California. So that should be at least warm, if nothing else.
Oh, that sounds fantastically cool. I mean, obviously, unfortunately, I am tied in by school holidays, having 2 kids. You don't have that constraint, so scheduling your winter holiday whenever you want makes an awful lot of sense.
Indeed.
But getting into what's hot and what's not for fintech in the month of January 2025. Bloody hell, we are moving fast. We're already in February, and we're talking about what's happened in the world of fintech in the Nordics in the month of January 2025. Janne, you want to give us a highlight, a big picture? What's been going up? What's been going down? What has caught the general attention of the Nordics?
Yes, so absolutely. It's the first month in, and maybe a bit surprisingly or not, there was a lot of hype in the crypto blockchain decentralized finance area. So yes, I was waiting to see that reaction from Ville. I love this. But yeah, we saw 2 funding rounds, including Lava Networks from Iceland. They raised $12 million. Then there were also a couple of product launches. So Ovoro from Finland launched an AI-powered trading platform for cryptos. And then we also saw the first regulated memecoin, and also Lunar entered to that space in Norway. We'll have a closer look to those 2 cases in a minute. Otherwise, maybe a shout out to Enable Banking. They seem to close 3 new partnerships in January. So open banking and APIs are going strong as usual.
Do you feel or assume, I don't know if we should feel, assume, or what the case is here, but the fantastic growth suddenly of crypto in January, could this be tied to what's happening in the US?
I think so. Even when I've been talking with the regulators, so they say that it actually reflects quite much with the current Bitcoin price. How much do they get inquiries about, new crypto initiatives, regulated companies, payment licenses, and MiCA and so on. So for sure, the Bitcoin rally and Trump has to do something with this. But yeah, we can maybe discuss the world of also meme coins in a bit.
What do you think about all of this, Ville?
Can I just stay silent? No, I mean, I agree that the reason, one of the reasons I suppose, but the biggest reason for this current enthusiasm around this topic is of course the change of government in the US and the resulting situation where they're pretty much defunding and unplugging all the supervisory activities related to crypto. So the industry is seizing on the opportunity. Now everybody knows what we think about this topic and whether it's good for the society or not. I guess we're gonna now have to see how this plays out in a larger scale, unfortunately from my perspective. But the one thing that I might see the silver lining here is that ever since the Bitcoin white paper was done, everybody was saying that this is the future of money and that the real actual tangible use cases are just around the corner. If only we wouldn't have these pesky little regulators stopping our fantastic new innovations, we could do so much beautiful things. Well, now there's no longer any regulation, so let's see. I would argue that in 1 year's time we will still have no use cases, but again, I'm looking forward to be proven wrong on this.
As they say, I'll grab my popcorn and sit down quietly in the corner and watch this all play out. I've got my views and thoughts on this, and I think I know how this is going to play out, but I'll grab my popcorn, a big bucket of it.
Yeah, again, it's time for these very loud voices to prove that it's actually worth something, because once they got rid of the nasty little regulators. So yeah, let's see. Again, we can speculate, but it's better to just show and tell.
Yeah. Another thing that very often is coming up in the sort of overall picture, Janne, has been around funding and the growth or reduction in funding. What has funding habits been looking like during January?
Quite bad. Honestly, I think starting from last summer and the autumn, I thought it was like a temporary thing, but now I kind of have to admit, okay, this is the new normal. I guess we only have a few rounds. 10, 20 millions is already quite impressive. So yeah, it's quiet at that side. As been said before, luckily we have more and more companies generating revenue, so it's not the end of the world, but for sure, fintech is not in the favor of new investments.
Talking about in the favor of new investments and expanding that a little bit further, are you seeing a growth in new fintechs starting up in the Nordics or coming into the Nordics, or is the pace of individuals or people starting new fintechs slowing down?
There's new companies coming to the market. Of course, we're a bit down from the maybe the crazy years, but there's still new companies coming to the market. And then, of course, I see a certain amount of healthy consolidation. You know, winner takes the market, and the big companies grow bigger. So, yeah, maybe a bit more like could be boring, but maybe a bit more healthy and mature stage.
So we're starting to get into a bit more of a even keel where things are moving slowly, people are being more realistic when it comes to funding, and entrepreneurs are having to be a little bit more conscious in how they define their value propositions and what the value is that they're bringing to the ecosystem or the world of fintech before they get any funding or any growth.
Yeah, you could say so. And actually, now that being said, I think we discussed a few episodes ago when Minna Solutions was acquired by MasterCard. So now the founder has a new initiative. He's starting a dynamite factory in Sweden. So he's not sticking to fintech, but you know TNT is you know very topical thing right now in Europe.
In Sweden, especially.
but also Daniel and Frederick, who founded Think, they now finally ended that project as it's owned by Visa. They're working with something new, and I got the hunch that it is related somehow to fintech. So they haven't abandoned that industry.
So I see a parallel here, right? So investing in dynamite industry in Sweden is the same as investing in crypto and blockchain in the current regulatory environment. Got it. Okay, good.
I was thinking slightly differently. I was wondering whether he was starting a dynamite factory just so he could go and blow up things to win back some of the money that he has put into crypto. But you know, that's a good one. But moving on to some of the headlines, like we do each time we have one of these episodes, why don't we go to you, Janne, first? What headline in January caught your attention?
Yes, so as I already mentioned, so we have now the first MiCA-regulated meme coin. So basically, we have now the MiCA regulation, so the players in the crypto field can play by the book. And of course, we've seen a lot of different kind of meme coins. They've got a lot of critic. What's the purpose here? But now at least the Finnish guy have something called Swan, definitely regulated meme coin, paves the way for Web3 regulation. And my question is like, yeah, what do you guys think about the meme coins? We have had quite a lot of things going on now, especially in the US market. We have had the Donald Trump coins and Melanie coins and Hawk Twa coins and whatever. So what do you guys think about this?
I'm going to pass this to you first, Ville.
When I last did a presentation about some crypto-related topics, I mentioned this news article that was a few weeks ago in Helsingin Sanomat, the largest newspaper here in the Helsinki region, that was talking about the meme coins in context of what's happening with the Trump coin and Liberty, Freedom, whatever coin, and then the Melania Trump coin and so forth. And they mentioned that this meme coin thing is like kind of a toxic combination of a pyramid scheme and gambling. And I think that's quite accurate. As I said in the presentation, I'm going to say again, not my words, it was the reporter's words. But I think that has a bit of truth to it. The kind of democratization of scams and pyramid schemes is now so easy. You don't need to do anything. You can go to a website and in minutes, you can have your own meme coin, and then all you need to do is to start shilling it, and people will be able to use it typically on the Solana blockchain these days because it's cheaper there, but some of them are still on Ethereum. So again, it's to state the obvious, there is no value here, there's nothing. The people dealing with meme coins, they admit as much. Pretty much if you read this, they basically say that this is worth nothing, this is not a financial instrument, this is just a meme coin, and the only purpose is to try to time your buying and selling at the right time, which makes it basically gambling. And the people involved with this, again, they know this perfectly well. And explaining this to them is like talking to people inside the casino, gambling their money away. They don't care. They know exactly what they're doing. I think the most important thing here is, and this is something I heard on the Crypto Critics Corner podcast, another great podcast, by the way, is that we should be talking to the people outside the casino so that they understand that whether or not they want to go in, it is something that they go and do with full understanding of what they're doing. MiCA angle of this news article, however, is a bit interesting. As far as I remember, and again I might be a little bit off here, but again, as far as I remember, the definition of you being able to do your own coin or a crypto kind of digital asset as defined by MiCA is that you have to publish a white paper, and then you have to have the actual implementation match that white paper so that there is quote unquote transparency about what you're doing. Now, if you're basically bluntly stating that you're scamming people with the meme coin in the white paper, then technically I guess that's then compliant with MiCA. So again, all you have to do is be transparent and honest about your scamming, and then you're good. But again, I might be proven wrong. So again, looking forward to feedback on this episode. But that's as far as I've remembered that specific part of the MiCA regulation. So again, I don't see anything positive in this, to be honest. There is really no value in any of this, other than, of course, if you're a degenerate gambler. But yeah, that's just me.
There's value in this for the people creating the coins, and that's about it. I mean, it's a pump and dump scheme.
Yeah,
we know this repeatedly.
Yeah,
right?
So again, this is a democratization of scams in a way that allow people to concentrate wealth from the many to few in an industrial scale. So whether you think that you can be in those few is the equivalent of playing the lottery every week. So again, people go into this because they think that they're smarter and they're better at this timing than others. That's exactly what gamblers do. So they believe that they can quote unquote beat the system, or at least beat the other players in one way or the other. And this is just the one version of this. And in the long term, again, 99.9% will lose their money in this. But it's the ones that win, the 0.1% that make most noise. And that's why in the current kind of social media world, they also get the most bandwidth, unfortunately.
I need to double check this, so maybe I shouldn't be quoted on it. But I do believe you mentioned, Janne, the Hawk Tua girl who did her own meme coins. And very obviously that was a pump and dump because it all went up and back down again so quickly. But I have a recollection, and I could be wrong here, that she's actually ended up in litigation because of that. So, it's not always a win for everybody. There are chances and cases of things going very, very pear-shaped and ugly for individuals. But at the end of the day, like you said, Ville, this is gambling. And just like how the chips in a casino only really have relevance in that casino. I mean, the minute you walk out of a casino and you've got the chips with you, you can't really use them for anything. You have to convert them back to cash. And the casino at the end of the day decides what the value of those chips are. So same thing, it is gambling. It is a twisted, weird way of doing things. And the thing that concerns me the most really is lack of understanding, lack of transparency, and lack of visibility. There are too many people who are enticed by the quick money scheme and the social media socializers and influencers that are giving wrong and bad information. It fuels the intentions of all of this in a bad way, and that concerns me an awful lot. Has concerned me right from the start when it comes to, it started with Bitcoin and it moves on to whatever else and meme coins. And so I'm hoping that things will settle down and get sorted out, but chances are this is going to get worse before it gets better.
Yeah, so why do you think we still in the traditional media for decades have had these headlines that this and this person won the lottery, and read here what he or she did with the lottery winnings? Those are the most clicked articles. People click them because they find this fascinating. They somehow want to participate in that kind of fantasy of doing that. Now, take this to industrial exponential scale with current social media and the meme coins, and then you have the explanation of why we're talking about this stuff even today.
But even there, when you look about news articles of people who have won the lottery and where are they now and what have they done with their money, it's a clear visibility into people's lack of financial literacy. Right? You win the lottery, they go out and buy 15 Ferraris, houses for their friends and family, and before you know it, they've got no money. Rather than saying, I need to invest in this, I need a financial advisor that will help me to look after this, and I need to think about taxes and everything else. You need to understand what you're doing. And again, back to what's happening with meme coins and cryptocurrencies, there's too little regulation, there's too little transparency, and I think there is too much confusion for most people to actually deal with this in a sensible way. But we are on high horses here, Ville, you and I. Janne, we'll pop back to you. What do you actually think about all of this? Do you have any meme coins?
I don't have any meme coins. I gotta say now with back to Swan. So yes, if you can visit their website and they do have the white paper, there's quite much, technical stuff. Then they are literally throwing memes in between the white paper. They do seem to have ideas about European-wide crypto casino and so on. I gotta say that I'm not that deep into that, so I could say anything smart or of how will it potentially turn out. But then of course when we talk about meme coins in general and what we've seen in the US, so of course it's just a gamble, and nobody kind of should be that stupid that they come afterwards to say that hey, it was a scam. But then again, we seem to have that kind of people. So it's a little bit like regulating, casinos. I think in Finland we already had like people have to authenticate and so on, and maybe if you buy on the stock market some very risky instruments, you have to kind of prove that you have an understanding that it is risky. So maybe we need something similar here.
But that's actually a very valid point. There is a lot more regulation around gambling and casinos globally than there is around cryptocurrencies and meme coins. So a lot still to happen here. I'm actually interested, you listeners out there who are following us, what's your view? Leave us a comment, let us know what you think about the growth of meme coins, particularly here in the Nordics. And maybe tell us, have you bought some? Are you expecting to make a lot of money? Do you think that this is the future and where we should go? Let's move on to the next article and Ville, what caught your attention this time in the January news?
Yeah, so let's switch gears a little bit from the crypto discussion, because again, it's quite different from what's actually happening in the financial industry. The one that I picked was our favorite person-to-person payment system, MobilePay, in Finland and Denmark specifically this time, rolling out a fee for transfers exceeding 400 euros. So for the one listener who might be there who doesn't know what MobilePay is, so Vipps MobilePay is a conglomerate of Nordic payment wallets. Again, Vipps being the brand in Norway, MobilePay in Denmark and Finland, and to a lesser extent Sweden. And this is a single company now, private company, and they have started their journey from person-to-person payments with your mobile phone number. Again, getting very popular in Finland and Denmark, doing this. Now, what's interesting about this new fee for transfers exceeding 400 euros is that they have been struggling to find a profitable business model for a long time. It is a common truth in these mobile wallets or digital wallets focusing on P2P that's the first thing you do. So you start from person-to-person payments. You make that easy, free, quick, and then get scale from there. So that's kind of step one for you to get your foot through the door in this financial, in the payments ecosystems in where you want to deploy. And if you really make that work, so you create the brand, you give it for free, you get people using it, then you start creating the next stage in your journey, which is that the merchants, the stores will start to ask, the consumers will start to ask from merchants, can we please pay with MobilePay or whatever is the person-to-person payment that you have been using with your friends for a long time. And you create this pull from the merchant ecosystem. And once you create this pool, then the merchants will start gradually doing that, and then you can start to monetize on that ecosystem or your user base, because again, the merchant payments, or the C2B payments as they call them, are the ones where you can actually get some money back from the payments. Again, people are used to having payments for free, so they will not pay for those transactions. Now, this hasn't exactly worked out perfectly for Vipps MobilePay. In Norway, it certainly has gained scale, and you're able to pay pretty much anywhere, especially now after the NFC rollout that we talked about a few episodes ago here. They've been able to get some scale in Norway, but they have been lacking this in Denmark and Finland, and obviously Sweden. And I think this new fee over 400 euros is one way for them to kind of fix their income statement a little bit, so they were able to kind of get some revenue back from P2P payments without affecting most of the user base. In terms of numbers, what they said is that that the 90% of their transactions are below the limit of 400, and then for those transactions that are over 400, they will only charge a fee of 1% from the amount over the limit of 400 euros. So if I send 500 euros, then it's going to be a 1 euro fee for that. So again, it's not massive. And again, most of these transactions are below 400. They also had an interesting element that yes, if you try to break your payments, your 800 euro payments into two 400 euro payments, you can do that. But if you do that within 24 hours, then you will be subject to the fee for the 400 euro excess. But if you do it on the next day, so again, wait 24 hours, then you're still below the limit and you don't have to pay the fee. So there's that. I think this is a natural evolution of the kind of business models of these P2P wallets, and we'll see how people react to this. I think this is not going to be a major bump in the road for them, but I'm also guessing that this will be not be the last fee that we will see from Vipps MobilePay in the near future. And again, they already charge an arm and a leg from the cross-border transactions, but this is the first time they're doing it in domestic transactions. And we'll see how their fee structure gets gradually implemented as they become more and more established player in this wallet space here in the Nordics.
I have to admit and say that I haven't read the news article Ville. So one question I've got quickly for you: who pays the fee? Is it the sender or the receiver?
Sender.
The sender pays the fee.
Yep.
Okay, and another quick question before I pass to Janne here. Like you pointed out, which was actually going to be one of my questions, if you break up your payments, will MobilePay be smart enough to understand that you've broken up your payments? And you answered that one. I've got another one though. If we take the scenario which is you, me, and Janne, and I owe you 800, if I send you 400 and I then send 400 to Janne and Janne sends the 400 to you, is MobilePay smart enough to figure out that I have actually used a round robin to send you 800?
I guess we have to test.
But that aside, Janne, what's your view on this one?
So MobilePay is definitely like in the game of, becoming something, or the payment method. And I think they already are in what it comes to peer-to-peer payments. And for me, MobilePay, it's pretty much a peer-to-peer payment app, and that's it. And that's currently their challenge because there's no business in it. But in my understanding, they are pretty okay on the online side as a payment method, at least in some markets. So yeah, that's where they have business. And then the next thing is that they have to become like a in-store payment option number one, or at least number two or something. And now that's the big thing there. Obviously the rollout with the NFC payments for Android, but now of course iPhones as well, as that situation has changed. So can they do it? How can you attract people who've been using Google Pay or Apple Pay for a decade or at least years to change to MobilePay? What's the drill there? How to attract people? And then of course once you do it, then you can actually move from using the card payments to account to account or something where they could actually take a share of it instead of Visa and MasterCard. So they definitely have the potential, but it's a long road. And I think, like, talking about account to account payments, which has been like a super trendy thing also in these podcasts on a monthly basis. So they have the potential of making it a thing. But I think we're living very interesting times now. What's going to happen in the next year or so?
Yeah, two more things to mention here for the sake of clarity is that they have already had, or Vipps MobilePay has already had this fee for quite some time in Norway. So it's not new there, but it's new to Denmark and Finland, originally the MobilePay countries. So what they're doing is they're kind of consolidating on the business model side. So in that sense, it is not new. It is also not applicable for payments between individuals and merchants, or businesses. So it's only on a person-to-person payment level. So again, you are able to pay without fees to any stores or merchants that accept MobilePay. So there's no change there.
I have sort of multiple different things running into my head on this. The first one is a recollection back to our last episode with Leda, where we spoke about her book and some of the perspectives that she's had from writing that book. And one of the things that she said is we've got to the end of the period where fintechs can launch based upon a fluffy business model, assuming that they're going to imagine themselves making money somewhere down the line, and therefore needs to really now start thinking about what is my value proposition, what is my market, and am I really going to be able to turn this into a profitable business? And I sit here and I think about MobilePay, where I agree there is no such thing as a free lunch. But if you haven't really thought about how you're going to move into a profitable business that really is going to grow for you, then you're having problems from day one. And on top of that, I could argue this isn't that new. I mean, we've had PayPal for a long time. It's peer-to-peer. It was slightly different. It wasn't a digital wallet on your mobile phone when it started, but it was still a peer-to-peer solution. And they always had some fee associated with it and still have. So to a certain degree, paying for transferring money, we've had that in the past. We're going to continue to have that. And at the same time, I can see that MobilePay need to make money. They're not going to do this for free, but they need to figure out where it is they're going to make that money going forwards.
Yeah. So one point on the PayPal thing. So first of all, yes. So again, it's ultimately all about unit economics. So if you are losing money on every transaction, then your unit economics are not exactly working. Now, one thing to mention about PayPal is that we all know the origin story of PayPal, which is that they started from being the only available payment method on eBay, because again, back when they started, there was no ways for you to do payments on the internet. So they already had a commerce platform embedded from day one. So they didn't actually start from person to person directly in the same way as MobilePay has. So they already had this marketplace and commerce and merchant connection from day one. So from their perspective, the unit economics had a much brighter road ahead of them compared to trying to build that from scratch after you have bootstrapped your user base.
Well, all very, very true. And I think that we will all continue to be quite active users of MobilePay. I know I use it quite a lot, particularly for peer-to-peer payments. So I think they're here to stay. They are going to grow. But it'll be interesting to see how they expand their offerings and capabilities. Like I've said multiple times, how much more is it going to take for Earpussy to basically offer the same capabilities and therefore drown out potentially MobilePay going forwards? Let's see where all of that plays out. Be interesting to see from our listeners how many are actively using on a daily basis MobilePay versus something else here in the Nordics, or maybe there's some out there that still haven't actually jumped onto the MobilePay bandwagon and are desperately trying to avoid it for one reason or another. If you are, let us know why, but it definitely works as a good way of moving money between you and your friends. As for me, I picked up an interesting news article. I thought it was interesting because just like Ville, I have a sort of deep-rooted angst when it comes to cryptocurrencies and bitcoins and whatever else you want to add into that bucket. So when I saw the announcement that Lunar, which is a regulated bank, quite strong here in the Nordics, has brought crypto trading into their platform for the Norwegian market, I was both intrigued but also frightened at the same time. I mean, there are a number of neobanks that are offering this. Revolut is a good example of this, where you can go and buy various different crypto flavors and invest through their platform. They do make it very, very clear, do this on your own risk. This is not something we strongly recommend. They even give you education to learn more about what it means to trade with cryptocurrencies. Lunar is sort of going the same route. So I applaud Lunar for taking a responsible angle to this. They're saying to a certain degree, people are going to do this anyway. So why don't we help them to do this in a better way, a more regulated way, a more secure way, give them some education, back to this financial literacy, and get them to understand what it is they're doing in a good way. So from that perspective, I like it. At the same time, I'm really hoping that Lunar will put in some guardrails on this to make sure that people don't end up in the wrong place. But that will play out as time goes on, and I sort of want to pass over to you here, Ville, on this one, but I think you're basically just going to say the same as I have, but over to you.
This is an age-old argument. I mean, having worked in a bank for a while, the number one thing you hear from different kind of technology providers and solution providers in the crypto space is that, look, dear bank, it is the best that you offer these things because you are able to do that in a safe way as possible. So again, people are going to do this anyway, so they're going to find out ways to do it. So it's better you kind of do it for them, so you're at least able to protect them somehow. I can see the logic in that argument, but I don't fully buy it. So I mean, in essence, if you kind of caricaturize that that you could say that, well, people are going to use narcotics anyway, so you might as well start selling dope, in your branch offices. So again, it's better you do it in a safe environment than letting people buy from these criminals. That is not a sustainable argument. Again, availability equals usage always, and if we agree that it is a form of gambling, then I don't think that banks should be doing this. So again, we are still waiting for that actual, tangible, valuable use case to come from the industry, and then we can have this conversation again. But before that happens, I don't fully buy the argument that it's better that the banks provide this gambling facility than the non-regulated institutions.
I agree with you 100%, but I'm having sort of interesting visions now of people making trips to the branch offices so they can sit down and smoke a joint whilst they discuss financial literacy with the bank managers. I mean, it could be pretty chilled out, laid back, teach me about how to do cryptocurrency trading. Branch offices would really come back, wouldn't they?
No comment.
So, Janne, are you looking forward to smoking a joint in the branch office?
Haven't been to a branch office in a while, honestly, but yeah, back to the lunar case. So I do think that the kind of barrier to start investing in cryptos is lower. Like for myself, like I'm not a super crypto fan or nerd, so trying to find like what's the best broker, making an account, that seems to be kind of like a big job. But then if you can do it directly from your mobile banking app from the provider you already know, so then it of course makes it like an easy entry thing to okay, just buy some bitcoins or stuff like that. So business wise it makes a lot of sense for Lunar. Then well, of course the other thing is the should you provide cryptos at all? But that discussion is for boomers.
But I partially disagree to a certain level here, because just like Ville said, if you as a bank offer your customers the ability to trade in crypto, remembering that the biggest asset to a certain degree that a bank has got is that they're custodians of trust. So if I as a bank give my consumer customers the ability to trade in crypto, knowing that they're volatile, knowing that they might lose all their money, I do run the risk potentially of customers. At the end of the day, money is an emotional subject. So if customers start losing money, they're going to turn to the bank and say, but dear bank, you didn't warn me, or dear bank, you didn't give me transparency, or dear bank, you didn't educate me or advise me well enough, and now I've lost all my money. Oh dearie, what should I do? Now, admittedly, the bank is going to turn around and say, not our problem, mate, you're the one that did it. But at the same time, that's a big hack against their reputation and their customer relationship. So I actually think that to a certain degree, yes, fine for a bank to offer these capabilities, but do it with the right perspective. Don't have rose-tinted glasses on thinking that everything's going to be okay. Be ready for a potential backlash and make sure you do everything you can to make sure that backlash is minimized as much as possible.
Yeah, but I think that makes sense. I think in this case, maybe it's like it can be intentional and a known thing that okay, the Lunar customer base is different than it is in Nordea, and you could even like count on it that okay, the people who are at Lunar, they are they understand more like what cryptos are. You can lose money, and then of course it is a big. It's a choice. How do you want to kind of sell the thing? Do you want to kind of promote cryptos, hey, become rich, or hey, do you want to try cryptos? It is a gamble kind of thing. But yeah, that makes sense that if you have a bank where the business and the trust is somewhere else and the potential upside of crypto is very small compared to the other business. So yeah, then maybe you have to think twice. But then if you see that cryptos could give a potentially like a big increase in revenue, and you think your customer base is suitable for that, so then maybe yeah. But yeah, good point.
Yeah, and remember, the only reason why the quote unquote value of any crypto goes up is because there's another person who is willing to pay more money than you paid for the specific crypto token. So because of this, and since there is no underlying value whatsoever, the liquidity is actually paper thin in these markets. Now, the kind of efforts to widen the availability of cryptos is a very cynical exercise of let's find a greater pool of people who don't understand this in order to get more liquidity into the market. And I feel that making these assets, these gambling assets, available for the broader audience through generationally trusted intermediaries is just another cynical method of basically getting that liquidity available for the people already in the casino. So again, I don't think this is sustainable from an ethical perspective. But again, maybe we're just waiting for that fantastic use case to appear, and then both me and Paul will be proven horribly wrong on this topic. But yeah, waiting for that today as we started this podcast talking about.
Absolutely. And as is always the case, we are rapidly running out of time. But to our dear listeners who might be new to this podcast, as you can tell, Ville and I are maybe not the biggest fans of the cryptocurrency world out there. And those that have been with us for the last 11 seasons, you definitely know that we will happily be proven wrong. But until we are proven wrong, we will advise people to maybe be cautious about the world of crypto. But we like to add a little bit of humor and lightheartedness to all of our episodes. Ville does it at the beginning, I do it at the end. And that is, of course, our joke. And as is tradition, being the Nordic Fintech Highlights, we pass that honor over to Janne. So Janne, do you have yet another horrendously bad but funny good joke for us?
Of course, I really put a lot of attention to this, and it's good that we just talked about investing.
Okay.
So, how do frogs invest their money?
Oh shit, I'm scared to even answer this one. I have no idea.
Please tell us.
They use a stock croaker.
No!
Oh,
so bad. So bad.
Thank you very, very much, Janne. Okay, with that, we're going to go out with a blast. As always, Janne, if people want to continue the discussions with you or know more about Helsinki Fintech Farm, how can they get in touch?
So yeah, helsinkifintech.fi, and then I highly recommend to subscribe to our newsletter, monthly updates about the Nordic Fintech and much more, and then also our LinkedIn page, Helsinki Fintech Farm.
Fantastic. Ville, any final words or comments or thoughts?
No, except that none of that we talk about here is any type of financial advice. That's the only disclaimer maybe to add here in the end. But other than that, good discussion.
Yes. And as with this being the first episode where we have got a new member in the team, we will start announcing at the end of every episode that this episode has been hosted by Ville and Paul, and it has been produced and edited by Femi, our fantastically new family member into this growing and fantastic fintech world. If you want to know more about what we're doing, then please check out our website, fintechdaydreaming.com, or find us on all the normal podcasting channels, YouTube, and also on LinkedIn. If I can ask you just one big favor, one request, then hit that like button, hit the subscribe button if you've enjoyed what you've heard in this episode. And we really would appreciate it if you would just recommend this podcast to one of your friends. Just one friend, one colleague, someone else who you think might enjoy listening to Ville, myself, our guests, and Janne talking about fintech and the world of banking technology. We'll be back in 2 weeks' time for another episode, but until then, this has been Fintech Daydreaming.
This is Fintech Daydreaming.